You're watching Masters in Trading Live with Jonathan Rose.
Hey everybody, it's Jonathan Rose and welcome to Masters in Trading Live. As you'll see, there's a big celebration going on. So when my wife decorated my office, I said, I don't want to tell everybody it's my birthday, but then I kind of don't have a choice because she decorated my whole office. So today I am a half a century old. 50. That's fucking crazy to me. Sorry for cursing. That's just out of crazy. But yeah, my wife decorated my office. The coolest thing about my birthday is that my 16-year-old and I share the same birthday. This morning we went boxing for an hour. He gets his license today. Just a beautiful day. Super excited. Let's talk about the market though, because volatility is spiking. Volatility really started getting some strength Friday afternoon. And boy, did that market roll over on Friday, and it's rolling over into this week as well. Guys, thank you so much for the happy birthdays. I see you in chat. I'll have the chat open throughout the presentation. Really looking forward to getting into today's presentation. Let's go to the screen. Awesome. Thank you, guys. That's really sweet. Okay. Let's start here. Let me get my pen here. I'm going to cover this. So last week I was sharing charts because the QQQs, which are right here, okay, this is the QQQs, the NASDAQ for anybody, was bumping up to what's called the expected move. That's the expected move right there. We talked about this a lot last week. QQQs are bumping up to their expected move. So that was last week. And then Friday, we had the big sell-off where everything turned. Ken sharing, I think he shared this Wednesday or Thursday, talking about his QQQ position. And then on Friday, Ken was able to lock in $20,000 on this Q position. So that's just a phenomenal trade. Ken, way to go. I know a lot of people in Discord were able to make some money as that NASDAQ started to sell off. I want to go over the other charts that we discussed last week, though, because we look at the market differently. Last week, we talked about you could trade you could speculate on just one instrument. You could trade pairs. You could trade three instruments. Three instruments were a triangle or a butterfly. Okay, a butterfly is when you have three products. Okay, so say QQQ is the belly, and then the wings, IWM, which is the Russell, and then S&Ps, the SPY. That's what this chart is right here. This is the NASDAQ butterfly. And you can see the NASDAQ butterfly is historically freaking really expensive. So last week, we finally start to see some weakness. Look where that weakness is. That weakness is in the QQQ. So here, you could buy the NASDAQ, and you can sell the SPY, and you can sell the Russell. Up here, you would do the opposite trade where you sell the Qs and you buy the other two. Looking at things from a triangle is a really cool way to see relative value. Here's another chart that I shared last week. Last week, I just broke these up into three different products: NASDAQ, S&P, IWM. And we like to call this just common sense like trading. Why is this common sense trading? Well, the Qs are expensive. Here's what it looks like. They all trade lower, but the Qs are trading off more than the SPY, more than the Russell, and we can see that from that triangle, which is also a butterfly. Okay, again, the belly, the NASDAQ, And you can look at it as the two wings. It's a really, really cool, simple way to look at the market. And really what I'm just doing is showing you the charts that we shared last week. Now here's an updated chart. This is a chart of the active market. And it's going to be right here. Okay, here's what it looks like. This is the live market right now. I took a screenshot of it because I want to be able to write on it. So this is where it's trading right now. I'm going to close this because it's right here. And so the green is going to be the NASDAQ versus the Russell. And that blue is the NASDAQ versus the Dow. Right now, you notice there's a little bit of separation going on? We see a little bit of separation. So the green, we would sell the NASDAQ and we would buy the Russell. The blue, we would buy the NASDAQ and sell the Dow. Now, the cool thing about this trade is I want to make this bigger for you guys to see. The cool thing about this trade, it's this. Look. Look. This is where I get excited with trading, for people to see, like, what are we really looking at? Like, big whoop, right? Like, what is that? Okay, going back to 2022. This is the RTY. RTY is the same as the IWM, okay? I know I speak fast sometimes. RWI and IWM are the same thing. One's a future, one's an ETF. This is the IWM versus the Dow versus YM. Okay? So right now, there's nothing more important than making sure that you're in the right contract. Right now, we're looking for longs in IWM. And if you're looking for shorts, you may consider the Dow, because the Dow is historically inexpensive relative to the IWM. Does this make sense, guys? Everybody in our chat, thank you very much for the birthday wishes, Julian. Here's what the IWM looks like right now, guys. Let me look at a live quote to see if we're above that 216 quarter. 218 is your line in the sand. 200 period moving average. You need to get above there. So if you are looking to buy the IWM, I would keep it on your radar, but I would not buy it until it takes out 218. Anything under 218 is weak. 218 is just your key line in the sand. I want to share a trade that we had last week. And this trade, this is a divergence trade. And why was this a divergence trade? Because it was SPY versus the QQQ. And this is actually the trade that we shared in our membership February 13th, February 13th, February 14th, and February 13th. Now, February 13th is 11 days ago. The first thing that we did is we got long SPY, and we were getting short the Qs. Right? So SPY ends up rallying last week. We got out of our SPY. We locked in 70% on the SPY leg of the trade. And then we just held the two other legs waiting for the QQQ to finally come off. Our 530s were in the money. Our 525s, now we're 522. Our 525s, we didn't get all the way in the money. We ended up covering these for 50 cents. So we lost money on that, but the entire trade, we made some money. And that was just a really, really cool trade that we sat in for 8 days. I got the chat open. Thank you all for the awesome birthday wishes. We're also, we're going to move to All Access right now. In All Access, we're going to continue talking about the indices. For anybody who's interested in All Access, or if you've been following along and you're interested in our earnings program, divergence program, you can call the number on the screen. We have some really cool promotions going on. So as soon as I switch over to All Access, go ahead, call the number on the screen, check out our latest promotions, and we'd love to see it inside our Discord community. Thank you very much. This is 50. All Access. We'll see you guys in a second.